Financial expert Andreas Beck is now talking about why he sold his Bitcoin. The reason will shock you. At the same time, Michael Saylor talks about the potential for Bitcoin's price to skyrocket and gives reasons why the Bitcoin price will keep pumping. He also mentions why Bitcoin isn't a Ponzi scheme. But before we get to Michael Saylor, let's quickly check out what financial expert Andreas Beck has to say about Bitcoin. He always has really interesting analyses in general about the financial system and a great market perspective. But what he has to say about Bitcoin might really shock you.
Now, of course, I'd be interested in the asset classes too, but that's a bit too much for now. One more thing, just a quick statement about Bitcoin. There were a lot of questions. Are you surprised? Fascinated? How do you assess Bitcoin? What do you think about that? It wasn't a bad year.
No, I'm definitely very surprised. I have to admit, I do have one Bitcoin, but I just sold it.
There were a lot of questions. So you believe in?
No, I had the chance to buy 2 parking spaces in Munich.
Okay, that's a bit more tangible than a Bitcoin.
No, especially since there's this story that Bitcoin is a scarce resource. I don't know, but parking spaces in Munich are the most scarce resource out there. It's getting to the point where you might be able to auction off rent. And the city government in Munich has a specific goal to reduce parking spaces in the city center by another 30%. And I thought to myself, that's something similar to a Bitcoin, maybe even scarcer.
But recently, now you sold it. Recently.
But no, all jokes aside. Of course I'm surprised. And you have to admit, the longer the story goes on, the less likely it is to fall apart.
Especially as banks, Brawl Streaming, BlackRock, and others join in.
Strack, there's an ETF on that too. Yeah, okay.
And Trump is now also, the politics have become a bit more pro. So a ban is probably difficult.
Yeah, so I'm really surprised. I can't say it any other way.
So that's definitely a bold statement. He just says, okay, Bitcoin is limited to 21 million, but the underground parking spaces are even more limited. There might only be 5 parking spaces in that one spot or something. To a certain extent, I can understand the argument here, but I'd say the fatal thing you're doing is basically taking Bitcoin and selling off the entire Bitcoin supply. That means when you make sales or something, you're selling a part of it, like maybe half a Bitcoin, 0.1 Bitcoin, 0.2 Bitcoin. But really trashing the whole Bitcoin and trading it for a parking space, in my opinion, is pretty devastating. So when you make sales or something, you're selling off a part of it, like maybe half a Bitcoin, 0.1 Bitcoin, 0.2 Bitcoin. But really trashing the whole Bitcoin and trading it for a parking space, in my opinion, is pretty devastating. If we take a look at what the risk-to-reward ratio is here, of course, a parking space here in Munich might not be too bad, but we still have third-party risks. We have a state here that we have to trust to make sure property rights work, and a rental market that also has to function so that the rental markets don't crash and so on. And with Bitcoin, we probably have the highest asymmetric opportunity there is, because Bitcoin is an asset, a resource that everyone needs, nobody understands, but no one can ban. And that's the ultimate investment case. And Andreas Beck must have a really, really big portfolio. I mean, he probably has tons of parking spaces or tons of properties. So why does he need to sell off his Bitcoin like that? That means he could at least keep the percentage of Bitcoin allocation in his portfolio, just in case Bitcoin skyrockets in price. What's he going to do if Bitcoin really takes off? He himself says that he's surprised by the Bitcoin development. What happens if Donald Trump introduces a Bitcoin reserve strategy and so on? If Bitcoin multiplies tenfold or even 100-fold over the next 10 years, then he's just bought a parking space that might double or something, just barely keeping up with inflation, but he would have missed out on the biggest asymmetric opportunity of the last 100 years. But like I said, everyone has to know that for themselves. Everyone has to make their own risk-to-reward assessment. From my perspective, this is a very, very stupid decision, but feel free to let me know in the comments what you think. Could also be that the Bitcoin folks are wrong, that I'm wrong, and maybe in the next 10 years, parking spaces in Munich will massively outperform Bitcoin. I doubt it. That's always the question, are real estate or parking spaces really limited? Because what often happens is, okay, in 2001, when there aren't enough parking spaces, they just build more parking spaces, and then they might build them higher or something. So you can also have parking spaces in the underground garage, like on the first floor, second floor, third floor, and so on. Of course, it's purely theoretical. I get that the space in the capital is limited. Of course, you could expand the city and build parking spaces elsewhere, but in the center of Munich, I realize that there are certain limitations. I keep having these debates with real estate professionals who tell me that the real estate market is limited and that there's an absolute cap. They say, okay, but with Bitcoin, I don't see that limit because in the real estate market, I have a physical space and I can't just build an infinite number of properties in that space. Yeah, to a certain extent, that's true, but like I said, theoretically, you could almost build infinitely high, well, not literally infinite, but you can definitely build a lot higher. And now we actually have a second very interesting statement from Michael Saylor that connects here, because Andreas Beck says, yeah, the institutional players are in, and now we also have Bitcoin ETFs. Michael Saylor is also a major institutional player. He is surprised by the development of Bitcoin, and Michael Saylor sees things quite differently here. That's the stark contrast. Andreas Beck has now sold his Bitcoin, and Michael Saylor always preaches, never sell your Bitcoin, not even small amounts. And if you want to sell Bitcoin, then just leverage your Bitcoin, then insult it, get a loan from it, and use it to buy your underground parking spaces or something like that. But don't give up the scarcest, rarest asset that exists with the best risk-to-reward ratio out there.
Listen up. It's going to flow into digital assets. It's going to flow into the Bitcoin network. And the logical thing for us to do is to buy it now, own the future, and just chase it up at any price. I think just the progressive acquisition of it makes sense. Just remember, if you had bought Manhattan a little bit every year from 1650 to 1700, that would have been a solid investment. Right now, the United States could literally buy 20 to 25% of the Bitcoin network, either by trading out its existing gold reserves or just by borrowing a tiny bit of money. So if the Bitcoin network is going to go up by a factor of 100, you might as well buy it now.
Michael Saylor sees it exactly differently than Andreas Beck. He's not saying to sell Bitcoin now. He's clearly saying to keep buying Bitcoin, even if we're already at the top. He compares it to Manhattan, saying that Bitcoin is even better than buying a property in Manhattan back in the day when prices were still low and all that. That's why he says the US is very, very likely to buy Bitcoin. Either they will print money and use it to buy Bitcoin. If they don't do that, then they will sell off gold and use it to buy Bitcoin, and Bitcoin will continue to pump its price massively upwards. He is talking about a 100-fold increase in the Bitcoin price, and you should buy Bitcoin now before the Bitcoin price increases 100-fold here. Of course, you can't guarantee that just because Michael Saylor says the price of Bitcoin is going to increase 100-fold, it actually will. But we have these two starkly opposing players. On one side, there's Andreas Beck, a financial expert from Germany who says, hey, he just doesn't see a future for it anymore, which is why he's selling his Bitcoin. If he really saw a massive future for it, he wouldn't be selling. On the other hand, we have Michael Saylor, who is even leveraging his position in Bitcoin, massively leveraging his company to keep accumulating Bitcoin. But you don't have to choose one extreme or the other. On the other hand, we have Michael Saylor, who is even leveraging his position in Bitcoin, massively leveraging his company to keep accumulating Bitcoin. But you don't have to choose one extreme or the other. So on one extreme, you have Andreas Beck, who says to sell everything. And on the other extreme, there's Michael Saylor, who's all about leveraging, going all in on Bitcoin, only Bitcoin, just full throttle into it. You can also take a middle ground, for example. A diversified portfolio, you have some stocks, you have some gold, you have some cash money, and you have some Bitcoin. So you can also take a diversified approach here. So that means there's basically an individual solution for everyone, and you all need to decide for yourselves where you stand on the spectrum. But now there's a second statement from Michael Saylor, because Bitcoin is often accused of being a Ponzi scheme, a snowball system, and stuff like that. I know a lot of financial experts in Germany who are selling their Bitcoin and stuff. The argument keeps coming up that Bitcoin is a Ponzi scheme. And now Michael Saylor is actually being asked if MicroStrategy is also a Ponzi scheme. Listen to what he has to say.
Because every time, because you issue more equity and to pile who's they hold, it's just to hit the points this game. Because so what do you say to people who claim, well, it's just a Ponzi scheme because every time Bitcoin goes up, you issue more equity and debt to buy more Bitcoin? It just keeps going and going and going.
Yeah, just like the developers in Manhattan. Every time Manhattan real estate goes up in value, they take on more debt to develop even more real estate. That's why your buildings are so tall in New York City. It's been going on for 350 years. I'd call that an economy.
There, it's still up.
So he clearly states in response to the question of whether Bitcoin is a Ponzi scheme or if MicroStrategy is a Ponzi scheme, because Michael Saylor keeps taking on more debt, leveraging even more in the capital market to buy Bitcoin, which MicroStrategy then pumps back up. He's basically saying, doesn't that have Ponzi-like implications? He clearly says, no, no, no. He compares it to Manhattan, where they keep leveraging the real estate market. It could be similar here in Munich, where the real estate market is also being leveraged more and more. He clearly says he compares it to Manhattan, where the real estate market is leveraged. Similarly, in Munich, the market is being leveraged. They're building higher, digging deeper, and adding more parking spaces. It's not a Ponzi scheme. They build higher, they build lower, and then they build even more underground parking spaces and so on. You basically keep leveraging it, and it's not a Ponzi system. Andreas Beck didn't invest in a Ponzi scheme, nor is MicroStrategy. Real estate allows leverage, but Bitcoin's supply is fixed, making it more limited. And you have to ask yourself the differences in the real estate market. As Michael Saylor says, you can keep leveraging the economy and then either expand upwards or downwards. You just dig deeper or build higher. With Bitcoin, at some point, it just isn't possible anymore. If demand goes up, you can't just dig up more Bitcoin or produce more of it. The The supply is absolutely limited. And that brings us back to the key point from the beginning. Bitcoin is indeed more limited than real estate because with real estate, you can keep building infinitely higher or lower and so on. And that's what's interesting here. I actually found it really interesting to compare Michael Saylor and Andreas Beck. By the way, here's another important thing if you guys. So if you buy MicroStrategy from Michael Saylor or if you buy Bitcoin ETFs or something like that, you actually don't have any Bitcoin that you can manage yourself. That's why I always recommend a hardware wallet like a TREZOR hardware wallet. It's really one of the best investments you can make if you want to hold Bitcoin independently, because with this, you can manage your Bitcoin completely on your own. You don't need a government, you don't need a bank, no ETF, and you don't need a company like MicroStrategy to manage your Bitcoin for you. You have complete access 100% of the time, you're fully sovereign, and you can safely hold your Bitcoin in self-custody, protected from hackers. I'll put a link down below to this TREZOR hardware wallet that I use myself and can absolutely recommend. And here, with the code Bitcoin Hotel, you even get a discount when buying a TREZOR hardware wallet. I'll also put a link down below for Bitcoin, the easiest way to buy Bitcoin in Europe. Super simple, super easy. I can definitely recommend it, especially if you're a beginner. It's really straightforward because the platform is very user-friendly. You can set up a savings plan, you can do auto wallet transfers, and there are many other features. You can also get a discount on buying Bitcoin with the code Bitcoin Hotel. Let me know what you think about Michael Saylor and Andreas Beck. Which side are you on? See you, take care, peace out, 1000.